Karuna, hi, good to have you with us. How have you been?
Hi, Ashu. Very good to see you. Been good.
This is a session long in the making, right? We've been trying to do this for some time now. Particularly excited to have you, Karuna, largely because we have some very exciting areas that you're investing in, right? And I think India has gotten to a juncture where I think focused capital has become so much more critical, relevant. There are a lot of other players who are doing it. But I think, you're cutting it for some of the sectors which are deep impact sectors, right? And India operating at the layers that it does, it becomes important to have a focus there, right? And this session also becomes an opportunity for us to discuss, those complexities that the India market, has to offer. And I think, what you're possibly also going to be doing, right, which I would love to understand in the process, is how are you cutting through the cultural complexities that come with, the sector focus that you have, right? And there's a lot of baggage that we have to deal with. Fortunately, that's how we are as a market, a complex market, right? But a large billion people market, which makes it exciting at many levels. With that, quick round of background, Karuna, and we dive into the conversation on talking about Enzia as a fund, your thesis, some of the investments that you've made, and what's in sight in the next 2.5, 3 years, right, for you as a fund. We'll discuss all of that. Over to you with a quick round of introduction. We start this conversation.
Super. First of all, thank you for being so patient with us. There was a lot going on, and that's why it took time for us to come back to you. Just giving you a brief about Enzia, Ashu. Enzia is a $40 million fund investing in health, education, and environment sectors. So we are a sector specialized fund. And we typically invest in early stage companies, call it seed, pre-series A, but these are basically checks which are between $300,000 to $1 million in the first round. We also want to work with a small portfolio of companies. So out of this fund, we'll be investing in 15 to 20 companies, and we will be doing follow-ons in our companies. So over the next 2 to 3 years, we expect to be investing close to $4 to $5 million in most of the companies that we've invested in. We've already invested in 5 companies, 3 of which are announced. One is 2 are in the education space. One is called Curious Junior, which is coding platform for children over mobile. The second one is a company called Leap.club. It is a women's professional networking platform. And the third is a company called Zenonco.io. That is a comprehensive cancer care platform. We're about to announce 2 more investments. One is in the insurtech space, and the other is in the emotional intelligence space, where we're basically trying to build a platform which teaches EQ to mid to senior level professionals and moves them from being managers to leaders, which we think is a huge white space, honestly speaking. So those are the 5 investments we've made.
That is amazing, right? I mean, this is the next question that I'm about to ask you, right? I would have possibly asked you through the course of the conversation, right? But as you talk about your portfolio, I have no other choice but to ask you this now, and that is that I started my conversation with this point, right? Now, when you're looking at all of these sectors, be it healthcare, education, environment, right? Now, India is an extremely complex market, right? They're not easy people to deal with, unfortunately, right? Every single region has a lot of those nuances, right? Now, when you talk of be it cancer care, when you talk of Leap Club, when you talk of Curious Junior, when you talk of some of the other for example, important emotional intelligence that you kind of talk about, right? Now, these are some very, very difficult businesses, right? You have to deal with a lot of, like I said, a lot of preset tendencies in the consumer base in India, right? Communication is just such a problem, which essentially means that, the traction that you intend to build over a period of time, right, is going to take a certain amount of patience and sustain, for it to become sustainable.
Yes.
How are you evaluating all of this, right? How difficult is it because of the sectors that you've chosen? So this is the first half of the question, right? The second half of the question is that, a lot of these spaces are not very, very, there's a lot of money which is coming to these sectors, right? I mean, particularly education for that matter, right? And when you talk about a coding platform, right? I mean, we know what this has gone through, right? This deluge of capital, right? Now, these are two very, pole apart problems, right? And you're somewhere in the middle of solving, I think, with each of them in a unique way, right? Love to understand, what's your thesis? How are you thinking, when you're looking at all this?
Couple of things. I think you ask very important questions, right? First of all, we have to agree India is a difficult market, and there are a lot of sub-markets, sub-spaces, so to say, in India. But being a sector specialist funds actually makes it easier for us than it would for other people, because we bring in a solid understanding of the sectors that we invest in. Just amongst the 3 of us as partners, we bring a very solid understanding of health and education, having spent 15 years each in these sectors at both the grassroots level in India and also seeing it from a PE M&A perspective as well.
Sure.
So the good thing that works for us is, one, we have an understanding of these sectors. We've seen these sectors evolve over time. We've also looked at companies across life cycle in these sectors, right from seed stage to large scale growth equity transactions as well. So that makes it easy for us. To your second point, these definitely are large spaces, but we do think there are a lot of wide spaces in these sectors.
Interesting.
Number one. Number two, when it comes to sectors like healthcare, we're looking at not just companies building in India for India, but we're also looking at companies from India building for a global market.
Interesting.
So we're seeing that as well. Third, I think what we also do is work with a network of experts who are helping us become better at understanding these individual companies and what will it take for them to win. An idea is just a start of the journey.
Right.
So yeah, we do believe there's a long path that the companies have to cover, and we're doing everything we can to be able to help them support in that journey.
Very interesting. Very interesting. Again, a question. I would have possibly asked you a little later, but I think it just becomes so much more relevant, right? Because the story comes together beautifully, right? Now, 2020 has been a very unreal, year, right? I think beyond 2020 has been a very unreal time, right? I think for each one of us at a personal level or professional level, right? We've seen a phenomenal transition that has happened. Now, for all of these sectors, we've talked about a couple of problems, right? That are there, right? But then, the consumer mindset and the consumer landscape has changed completely, right? Drastically.
Yeah.
We've become an information-first economy, right? We've become just so much more comfortable with technology. Innovation is gone. What is your sense of it, right? Across all of these sectors, what's the overall impact and the larger impact do you see? You spoke of white spaces, right? That have kind of opened up, right? I'd love you to break it down for us, right? What are some of those spaces that you're looking at, right? For example, I think with an example, with say a case study, with an example, I think which will help us understand, how you're thinking, right? As a fund, what are those nuances that are, for example, becoming important, right? When you're considering a startup, I think a lot of that comes together with this question, right? So, yeah.
Yeah, again, what you said is right. 2020, our experiences after 2020 have fundamentally changed the way we interact with technology. A lot of India interacts with technology. So definitely there is a larger comfort around more technology-driven platforms. And we do think there is an acceleration in adoption for tech platforms. Having said that, we also think it will still have to factor in the cultural nuances that the country at the grassroots has. So technology alone is not going to be able to address a lot of the adoption access issues that you see in this country. In terms of the approach, I'll give you an example of how we are thinking, right? One is we take a sector specialized approach. The second is also when we are thinking of building businesses, we're taking an outcomes-based approach. To give you an example, and I'll come to your question on white spaces after that. But when we look at companies, what we're trying to really do when we look at companies and when we work with them is take an outcomes approach to building businesses. And what that means is, while there is a need to focus on your daily active users and your monthly active users, it is also very, very important to focus on what is the intended customer outcomes that you want to deliver from day one. Just to give you an example, for the mobile-based coding platform that we have, it's great to see kids spending on an average 30 minutes on the app, etc. But what is really important is for us to be able to measure whether there has been any improvement in the logical reasoning capabilities of those kids. That becomes important. And as long as you're focusing on that, your business metrics will all fall into place. Is where we that's the nuance I think we are bringing to the table for a lot of our founders. In terms of white spaces, again, I think most of these sectors are just at the cusp of exploding. We've So in healthcare, as I mentioned, we invest in comprehensive cancer care. We think there will be a lot of platforms that will be built in there'll be vertically integrated platforms that will be built across specialties, because specialties is how pharma is organized, and there's a lot of 50% of value in healthcare sits in pharma. In education, emotional intelligence, as I mentioned, is a huge white space. While you're seeing a lot of unorganized businesses, individuals focusing on emotional intelligence, there is no platform that helps you practice emotional intelligence. And what this company is building is a combination of something like Grammarly, which will help give you nudges when you're writing in your written communication, but also give you courses which will help you tackle specific issues that you think exist with you, and create a platform where you're monitoring your growth on the EI curve as well, like we do in all other spaces. Yeah, in our mind, we think there are a lot of white spaces within health and education, and climate in India is a largely unexplored space. Whether it be alternate protein, whether it be climate data analytics, we're seeing a lot of action right now in terms of companies starting to build in these spaces. So we're pretty excited about climate as a sector as well.
Now, Karuna, there is a definitive change that is coming, right, on the consumer side of it. Of course, one is what we've kind of discussed, right, where we've come information first, and we have the automatic sort of approach, at least in urban and semi-urban areas, is that you basically go you search, right? All those trends are coming, right? But what has also happened is that we're consuming a lot of content, consciously and unconsciously, right? Now that is changing our behavior tremendously, right? Now, in times before 2020, you still had, a business used to happen in an offline online setting, right? More offline, less online. You had independent structures that used to sort of help a business sustain, right? Build, grow. There were a lot of inconsistencies, right? That became defense for many players, right? Now, in a connected ecosystem, that basically diminishes, right? And that's fast diminishing in India, because we're a cost-conscious economy, right? But what is also happening is that there are fats that are flying faster. The organizations which are calibrated to build for a longer term, right? And you kind of spoke of impact, that you kind of say, looking at and assessing. Now, in an environment like this, right, when the consumer's mind moves very, very fast, right? Their preferences are going to change just so erratically that it becomes unpredictable, right? So from a consistent curve, we're essentially getting into a fuzzy sort of a phase, right? Where your cost of acquisition is going to be higher because you're going to be acquiring the digital medium, right? But your ability to predict how that relationship plays out over a period of time is going to get tricky, right? Now, how are you looking at all of that, right? When you say impact, right, that I want to, for example, say with my coding platform, I am assessing impact, right? But the fact of the matter is that the possibility is that by the time you get to assessing that impact, right, that kid, the customer, or possibly the parent, right, are already out of that ecosystem. So two things that I want to understand is, one, how are you looking at this entire erratic behavior and tendencies that are setting in and that are going to become part of the new normal that we're in. Second, what I want to understand is how your matrix is changing of assessment. You're coming in fairly early, right? You're coming in at minimum check size is 10,000, right? Which is literally a seed stage capital, right? Which you kind of injecting. You might not necessarily have a reflection of the larger country. And we've discussed the cultural aspects, right? And how we're going to sort of the challenges that it sort of reaches, right? I would love you to answer this by explaining, how all of this is kind of changing, how all of this is coming in, becoming part of your assessment process.
Yeah, I think, Ashu, you answered a part of the question yourself, right? While we are a content, as a country, we are consuming the highest amount of content, and that is definitely shaping our views as a country, right? But the fact remains that we're still a very value-conscious country, and that is not changed. And hence our focus on customer outcomes. We're telling our companies, while it's great to acquire customers using different channels of customer acquisition that have opened up, because we are consuming content, and that can be used as a channel to acquire customers. In the end, you will have to deliver value to your customers if you want to retain them, if you want to make them your acquisition channel for the future, right? So we're focusing on these metrics. What is the value you're creating? What is the percentage of organic referrals that you're getting? Those are important metrics that we are focusing on with our companies early on, number one. Number two, as you mentioned, there is no shying away from the fact that CACs have gone up. across
Sure.
sectors.
Right.
And what that means in the short run is that we need to capitalize our companies. What
Right.
could be done in $300,000 2 years, 3 years back needs a lot more capital today.
Right.
Hence, also our focus on ensuring that we are capitalizing them well and supporting them in their growth
Sure.
journey as well. Hence, the focus
Right.
on follow-ons.
Interesting. You know, how difficult has your job and your life become, you know, as an investor in this environment? I'd love to understand that. A fun question, but I think an important question.
We're still early in our journey, but we do realize that this is going, it's not an easy journey.
Right.
What we're hoping to do and what we're actively doing is building a very strong set of systems and processes for ourselves within Enzia, proactively. Not a lot of them are required from a regulatory perspective, but we're proactively building a strong set of systems and processes, which helps us address some of the challenges we know we are going to face as we have to tackle questions of follow-ons in our companies. How much do we support a company? And we've all gone through these challenges in the 15 years of experience we've all had working in different funds. So hopefully all of that experience will come in handy as well. But it's a interesting environment to be in right now.
You know, I continue to talk to you know, a lot of founders, a lot of investors, right? And I think one thing which is a constant is that, you know, we were never prepared for anything of the nature of what we've seen, right? I think, you know, our inefficiencies have just gotten exposed in how, right? And I you know, and I think, you know, you of course, you know, you're very swiftly, you know, kind of not really highlighting the problem that it has become, right, from your standpoint. But I think investing has become just so much more complicated, right? Because everything that we've built is going on and getting challenged now, right? I think you know, going forward, you know, your job and your life is going to be just so much more demanding, right? And I think that's true for everybody in the investing circuit, right? Be it secondary markets, be it primary markets. I think everybody. These are crazy but very, very interesting times, right? Now, moving on to the capital investment, right? Incidentally, what we've also seen is massive amount of influx of capital, right? Be it global capital, even in India for that matter, right? You know, we've seen some amazing confidence, right? You have many more angel investors. A lot of syndicates, for example, come up. There's been an event of liquidity, right? In fact, a lot of retail investors who, you know, because of the savings that they had, right? And of course, I'm talking about the slightly upper echelons of you know, within the hierarchy, right, of the earnings. You know, we've seen phenomenal participation, right? A good founder today is spoiled for choice, and that essentially has made a lot of funds go back and think, right? What is it extra that they bring to the table, right? You know, how comfortable can we make a founder in the process? The relationship has changed, right? Earlier, it used to be a relationship where, you know, a founder would typically be with just about a few investors, right? And they were just about a handful, right? Very clearly visible names, right? Today, that has all changed, right? You never know who could potentially be that lead investor for you in an early stage environment, or you know, a lot of these funds that have now kind of come up, right? Who believe in it. Differentiators have become very, very important, right? Not a lot of people. So there are some who have definitely worked on you know, making some of those pieces visible. The contribution very, very effective. It's capital plus now, right? How is it that you are differentiating yourself? I would like to understand.
So one, I agree with you. This is a founder's first market now, and it's great to be starting up in the current market. Second, in terms of what we've seen, right? First of all, Ashu, I need 15 to 20 companies for my first fund. There are 10,000 companies starting up every year in the country. But more importantly, what we've seen in our conversations with founders is that with Enzia, founders enjoy the conversations because the constant feedback we get from founders is that they do not have to educate us about the sectors, the market, etc. And the conversation automatically moves towards how are you building the business, what are the things you need to get right in the first few years, etc. So founders are enjoying the conversation. And what that has meant is, for us, it has not been difficult to invest in a company that we wanted to invest in. We've not lost a lot of deals, which is a great place to be in, thankfully. And I think that is thanks to some of the work we are doing around building a founder plus fund. See, again, having been in the industry for long, we know everybody talks about adding value beyond capital, and we've questioned ourselves on how are we going to do that.
Sure.
in a tangible manner.
Right.
Number one is the network of experts that we are building, which
Sure.
is helping our companies in a lot of different ways, from being able to reduce costs on a concordant study that a healthcare company had to do for a point of care test, to
Sure.
getting the right experts for helping you with your branding, marketing, all of that. So both
Right.
functional experts and sector experts, that network of experts becomes very important.
Sure.
And being sector specialized, we only have to do it in 3 sectors, which makes our job easier.
Right.
Second, I think founders, at least Enzia founders, are loving the whole conversation on outcomes that I
Sure.
think I've mentioned it thrice, so I will not
Right.
explain it again. But they're loving the focus on outcomes, and they're
Right.
the feedback we're getting, and this was a pilot that we started
Right.
with our founders to understand whether they like it. And the feedback we're getting is this is helping them clarify
Right.
their business strategy in their own head when they have that conversation with us. So that is number two. Number three, of course, is we are also building a network of global funds that we want to work with, and then help our companies raise money easily and quickly, and from the right set of investors at each stage.
Interesting. Now, an added question. Of course, I think I understand. Why all of this is important, right? I think current times, calls for a lot of such. I think hedging of sorts, right? Or such kind of such ecosystem, which is just so much more important than traditional, right?
Yeah.
Now, Karuna, one question, right? And when you answer this sort of acronym, right? How important is patience become? You're not a syndicate, right? This is not perpetual capital, it's a fund, right? When that comes in with its own set of rules and regulations, right? You have a finite life with the fund, right? Of course, you want to raise the next fund, so on and so forth, right? But how important does patience become in a market like this? What's your sense of it? Has this become a priority?
Patience is important, right? And we actually, our fund life is 9 years.
Sure.
We do expect some of our companies to start giving us exits from year 4, year 5 onwards. But for exits, timing is critical, right? And some of these companies, some of the sectors that we are in, some of the spaces that our companies operate in, it is going to take them some time to build a valuable business. So patience is important in the spaces that we are in and the stage at which we invest.
And patience with startups, how important is that?
Super critical. As you mentioned, right? The customers are evolving, the market is evolving, and you will have to have a culture of quick pilots.
Right.
Quick pilots, fail fast, build the right product, and that's going to take time. But we definitely look for resilience in founders. That is one of the key things we look for.
Very interesting. And that automatically brings me to a question, right? What are the checklist, right? When you're actually shortlisting a company, when you're selecting a company, right? What is the checklist that you're going after, right? Especially now in a post-2020 environment, right? What are some of those? Like I said, I asked you earlier this question as well, right? We of course do not cover it in as much depth, right? But I'd love to understand, how, for example, the behavioral aspects of matrices have become important. When you're cutting all of this, right? Cohorts today need to be dissected, right? A lot more than what possibly happened earlier. And I think only with that, basis and foundation can you actually go on to take a call of investing in these companies, right? Because a lot of that the segments, right, and the subsegments of the consumer side of it are moving very, very quickly, right? So I think those trends become very important. Would love to understand your selection process and, like I said, some of the key metrics, especially in the post-2020.
So I think for us, apart from some of the standard things that any VC would look for, right, which is ensuring that the market is large, you are seeing a fundamental shift. Since we're doing largely tech-based investing, you are seeing a fundamental shift in the customers, and you see adoption happening, right?
Sure.
As a VC, we cannot be investing in areas where there is a lot of awareness building that needs to happen. So these are some of the market size, ability for tech-based businesses to break in. All of this is important. What is also important is ensuring that we are working with the right set of founders who are passionate about the spaces that they're working in, who have resilience, because these are sectors where you need patience, where
Sure.
things are evolving, etc. What we're also looking for, and this, for me, this answer varies across sectors, right? So if you look at healthcare profit pools are still very concentrated. A lot of the profit pool still sits in pharma. So we're excited about businesses that are building for pharma. We're excited about businesses that are building for a global audience. When it comes to medtech, medtech in India is a very small market. So when I'm looking at medtech companies, the first thing I'm looking at is, can you build an India to global business? And what will it take to build that? When I'm looking at climate, again, for example, alternate protein, for me, the market in India is still very small. And unless a company can bring taste and price parity in their products, it is a no-go. Right? Climate data analytics, I see that as a SaaS business. Again, India for global becomes important. So for us, the sector of what we're looking, the answer of what we're looking for does change based on the space that we're looking at as well.
Interesting. Now, Karuna, one thing that also is become very, very important, right? I think this is been discussing this question to a lot of other investors in the private world, right? I'd like to actually bring this to the fore, right? Now, given that you said that, listen, I'm not looking at entering a business where a lot of effort needs to, for example, be put into creating a market, right? There has to be a natural market which you can very quickly sort of go out and cater to, and that's largely because then you have the trends visible, right? Which is a fair assessment of the market that you're doing. That you're also taking a very conscious call and a cautious call that we cannot expose our resources or kind of consume our resources on evangelizing the market, right? That just is too difficult to miss, right? Now that essentially puts you in a spot where you will have lesser choice because there are other funds also who are essentially looking at the same momentum and similar looking companies, right? You could possibly come in and they could be, and basically when you're looking at the investing tendency, there's a certain herd behavior that you see, right? I mean, the fear of missing out is very, very high when it comes to VC community, right? Now, what happened on a lot of occasions is you have little choice but to enter an asset which is, in the same space, but not necessarily the first asset that you wanted to get into, right? Now, is that something which becomes a big problem? How is it that you sort of look at this, right? Because in an event of liquidity, a lot of this is already happening, right? The thesis continues to remain the same for a lot of large funds and micro funds, right? Large funds today also have smaller funds, right? So what's your sense of it? How are you sort of managing this particular aspect? I'd love to understand that because you have an investment in a coding platform, right? And we've seen many coding platforms that have come up. They've raised very large amount of capital. We've seen an exit also, right? We are also seeing the entire questioning around that model, right? I mean, a dissection of a very different kind of is happening, right? How are you positioning yourself, or how do you assess a condition like this? I'd really like to.
So, couple of things. I think what you mentioned is right? At the end of the day, we're a $40 million fund. And given some of the larger VCs will have the ability to invest in companies which are in spaces where you need to do customer education. Given the amount of capital we will put to work, I don't think we have that luxury. And we might miss out on, we will definitely miss out on some companies which will end up becoming large businesses. Having said that, I think there is a lot of depth in the Indian startup ecosystem right now. And what I need as a fund is 15 to 20 companies. If I go by the standard math, I need 3 to 4 multi-baggers, right? And I am hoping that given our sector specialist approach, we'll be able to change the VC math and take that 3 to 4 to a much higher number. So, see, listen, I only need 15 to 20 companies and I am already spoiled for choice, is the way I see it. Definitely, I'll miss out on a few, but that's okay. That's number one. Number two, to your question around the space itself evolving, right? I think the customer activism is good. And I've always felt, I think as a fund, we've always felt prescriptive solutions are not going to work. So for us, the whole genesis of the idea that we want to help our companies focus on customer outcomes from day one comes from the fact that we believe that customers know what they want, and you will have to factor in that from the product design stage itself. And continuously work on that on a regular fashion. So even things like in our portfolio management journey, we want to build customer interviews being done by our team on a monthly basis with our portfolio company customers is something that we want to build into our platform, because that will help us nuance the way we work with our portfolio companies.
Right. Interesting. Now, Karuna, one more thing, right? Revenues also become very, very important. I think that there are a lot of conversations going on, right? Which is that of engagement as a currency, and then of course the revenue as a currency, right? Now, the sectors that you already, you're kind of focusing on, right? I mean, I'm not considering environmentalists, largely healthcare and education, right? Now, these are a large part of businesses that you kind of see are essentially negative working capital businesses, right? And that's the nature of the industry, right? The other thing which is happening, while there's a revenue first behavior, the other thing that is also there is that, with the digitized ecosystem, there's a lot of transparency which is coming in, right? Now, that essentially means that the companies are going to move into a very commoditized environment very, very quickly, right? So while, of course, there is this thought, and then, and in the pre-2020 era, right, a lot of VCs continue to sort of look at this, right? That once you've built a distribution system, there are 20 other things that you can do on top of it, right? You might lose money on one, but there are 5 others that you're going to make money on, right? And that makes you a very sustainable, strong player, and your ability to continue raising capital also is very, very high, right? Now, in an environment like this, when there are many, many companies that are coming in, right? And in the early part of the conversation, kind of highlighted that the white spaces are opening up, right? There are companies that are solving for these smaller crevices that exist. Like I said, they're bringing a lot of transparency, right? So the larger distribution that we continue to speak of might not necessarily be there unless we get into a huge M&A sort of ecosystem. I mean, we've seen Pharmacy doing that, right? Where they've started to acquire a lot of these, smaller players, right? For specific issues going forward, I think it's going to be more micro acquisitions going to happen. That's my sense of it. I think that is going to become a large part of exits for, I think, all funds, right? Especially early stage funds. But like I said, right, because of this transparency, the revenues are becoming extremely commoditized, right? Your ability to upprice is going to be just so much more limited. How do you see that? Is that going to be a big problem going forward, or there will be other mechanics to sort of justify, such trends and tendencies which will play out in next few years?
Okay, so maybe I'll just try to break your question up, and you correct me if I don't understand your question right. The first part of your question is largely about everybody is building a connect with the customer, and then people are all bundling multiple services, products on the same platform.
Sure.
Right? And people are like, there's transparency. That also means if one company's product or service is working, another company in the same space starts to offer the same thing. Is that what you're saying? And so there's no differentiation, scope for differentiation?
So no, I'm saying, so one is of course that the scope of differentiation is lesser. That's number one, because there are a lot more people doing the same thing. There's more money available, right? Earlier there used to be 3 companies that were funded. Today there are 10 companies that are funded, right? That's number one. Number two, a lot of people are solving for smaller challenges, right? Earlier the environment was that, typically say 5 companies were not raising capital, 3 would qualify for the next stage, 2 would qualify for the next stage, and then eventually there'll be one which is going to say pretty much monopolize the market in a certain way. Here, what is happening is, in today's environment, what is happening is because of the crevices now visible. That's number one. Number two, founders being more experienced who are coming into the game, they are able to identify smaller problems, smaller entry points, right? Unlike earlier times when there were larger distributions that could get created over a period of time, today that possibility is getting limited, right? Somebody doing A could have higher engagement vis-a-vis somebody doing B, right? But the fact of the matter is, because there are more players which are doing it, right, and doing very focused activities, the entire game from a revenue standpoint is getting very limited, right? Very finite, and also getting commoditized at the same point, right? What's your view on that? Given that we've entered as an economy, right? We wanted a digital transition to happen. Digital transition has happened. My sense is next wave, which is going to be coming in, or the shift which is going to come in, it's already coming in OTT, for example, we're seeing it, is going to be that of paying tendencies improving. But again, like I said, it's getting commoditized very quickly. The revenue upside that you anticipate might not be as large and as long. How are you viewing that as a complexity in this environment?
So, So as I said first, I do agree with you that people are now also open to the idea of building for smaller spaces. Basically, what happens is, if you see the evolution of startups in India, the early startups had to do everything by themselves, right? Everything in India is full stack. Why is it full stack? It's the nature of the market. There's no infrastructure available. So a pharmacy had to do everything. Or now, as the ecosystem matures and you have different companies specializing in a few areas. Like today, when I'm looking at a waste company, that waste company does not have to figure out logistics for their business. Logistics is something they can outsource, which was which was not a reality 10 years back.
Right.
So I do agree that you will see businesses building for niche markets, niche problems and niche operations now.
Sure.
Having said that, if that niche is too small a market, it's something that's not exciting to us.
Sure.
It works in D2C space. The trend today seems to be building for a niche market and then selling it to a company which is building a platform. It might work in some spaces, but at least for us, we like niches, but we like big niches. For example,
right.
When it comes to professional networking, coaching, etc.,
sure.
we think LinkedIn is a very horizontal platform and does not solve for the problem of upskilling, coaching,
right.
moving up in jobs that customers need. So we are excited about vertical platforms. However, we do think some of these vertical platforms in themselves are large spaces.
Interesting.
So we don't like companies which are building for acquisition.
Interesting. Many questions on that front, right? But I'm gonna in line with the time that we allocated for the session, right? I'm gonna not ask you a bunch of those questions in this session, Karuna, but I'm gonna save them for our next conversation, a later conversation, right? And hopefully we're gonna have that soon, right? Towards the end of a conversation, what are the next 2 years like, right? Of course, you're just in the process of closing your fund. You've already made 5 investments through the fund. There are a bunch in the pipeline, right? But what are the next 2.5 years like? What are some of the things that we see you doing as a fund? Of course, apart from investing, right? What are the other things that you sort of start to do? Because all of what you're doing, because you're focused, right? There's always a very strong ability for a fund to go out and create a community, and that is something which is becoming a massive flavor for a lot of fund managers, for a lot of funds, right? Is that something on the cards? What are the exciting pieces that you're looking at?
There are a lot of things that we want to do. Today, I think we are limited by the bandwidth we have, and we're constantly working to release that bandwidth. But number one, of course, is closing our fund, making sure we're making some really good quality investments, and spending a lot of time on working with the portfolio companies that we invest in. So that's part of the course. That's what we set out to do. In addition, I think there are a couple of things that we want to do. One is this whole idea of how do we make investing, how do we make the conversation around investing more meaningful, more sustainable? How do we focus on building large businesses and creating value, and not just focus on valuations, next rounds, up rounds, etc. Number two, I think in climate, we see a lot of scope for us to be working with entrepreneurs who have solid ideas. So I don't know, maybe it will take the form of incubation, or it's too nebulous in our head right now, but it'll take some form. We want to be working very closely with people who have ideas or are passionate about climate, and helping them work out, helping them figure out their journey in this space. So that's something that we're working on. I think then the journey to fund 2 starts. So for us, Enzia is not one fund, right? For us, Enzia is a platform that will invest, that will continuously work on raising sector specialized funds. Today it is education environment. Tomorrow it might be a few other sectors. So for us, we see ourselves as a disciplined, sector specialized, early stage investing platform.
Fantastic.
And we'll continuously work to build that. So
super. Karuna, last question, cliched but important. And typically sort of it becomes more suggestive and more advice, right? For many founders who are out there who are building for India, right? And I think coming from somebody who's in the investing side of it is always important, right? Because capital, we're a capital starved country, right? I think it's important to understand your stakeholders better. I use this segment of our discussion for largely that, right? What is that one advice, suggestion that you want to give out to founders, right? Maybe 2. I'll leave that to you, right? Because I think capacity building is something which needs to be done right. What would that suggestion, advice be? If you're and you've been in a position of you've been a vantage point, right? And you've seen a lot of founders, right? What are some of those gaps that you would want them to cover?
I think number one, it's very important to be fundamentally excited about what you're building. Do not start up because starting up is cool, right? Because the journey will need resilience. So unless you fundamentally believe in what you're doing, it's going to be a difficult journey. Number 2, surround yourself with the right set of people. That's what is going to help you. And it could be co-founders, it could be advisors, it could be a lot of different things. But surround yourselves with the right set of people. because that's going to help you avoid a lot of the common pitfalls you see thanks to FOMO.
Interesting. Right. Interesting. Karuna, thank you so much for doing this. It was a fun conversation. It was an interesting conversation. I think the way markets are looking, I think these are very interesting times, right? The way markets are looking, I think it's
super
just
interesting.
It is so difficult.
I'm excited with all the liquidity hopefully getting sucked out, right? And good quality founders coming into the market, right? I'm thinking the next few years are going to be some of the best years for investors to be around.
No, I think completely right. And I think the good part is that there is this amazing liquidity which is now kind of available. Of course, there are global pressures. There are possibly events that are happening that might just squeeze the liquidity out. But my sense is I think the Indian domestic market has grown beautifully, right? My sense is I think a part of savings will continue to come in this. Investing is getting democratized in many levels, right? I think evangelism is happening of a very different kind. Awareness levels are much higher. People now know risks, right, that are there. And I think more importantly, startups are actually cut to solve for this market in a better and efficient way vis-a-vis a lot of other traditional companies, right? I think this is becoming more mainstream in that sense. The good part also is, I think, which you kind of alluded to, Karuna, is that a lot of quality funders are now coming in. And these are people who are, 10, 15 years of experience, like yourself, right? Who's had a fledgling career
founders in many ways
in the corporate world, right? And now you have a lot of those founders who are coming in and solving for challenges in fintech and challenges in healthcare and some amazing spaces, right? SaaS, for example, right? I think which is making the quality of overall output phenomenal, right? And I think like you said, right, these are exciting times at many levels. Karuna, it was a pleasure to have you with us. Thank you so much for doing this. Look forward to having you much sooner and discussing some of those points that we've saved for the next time. Thank you so much for doing this. Thank you.
Same here. Pleasure talking to you. Thank you for your time.
Bye.